Here's a review on the Nasdaq. This is a review for Monday 3rd of March, rather Monday 2nd of March 2026. So if you recall on the forecast, if you have not watched the forecast video, you should do that so you have the context and understand the narrative I was going to the day with. That's a weekly forecast. It's a forecast for the whole week. And this monthly time frame, I'm saying if NQ decides to close the new week opening gap, I'm anticipating a immediate rebalance being hit and rejected. So it's like a manipulation move on the first or second week of the month. And you see it hits immediate rebalance, it rejects. So that's what we're looking for. We're bearish, but it's always a possibility to hit the immediate rebalance on the monthly chart. So let's go to the 1 week chart. On the weekly chart, you can see the bias is bearish. All of these are bearish objectives: 23,280, 24,150. Low hanging fruit is sitting at 24,449 and a quarter. So we've seen the immediate rebalance hit. We're seeing price still above the weekly discount week constant encroachment, which is the midpoint of this week right here. For bearishness, I really want to see price closing below that week, closing below the constant encroachment of this week. For now, it seems we have support there, but I'm bearish on the week. I have bearish targets. The next chart we're looking at is a daily chart. Now, the daily chart, I'm anticipating low resistance liquidity run conditions to swiftly run for low hanging fruit objectives. Yesterday, we saw a large move up. This Monday's candle, right here is Tuesday's candle. All this down trading has happened in Asia. So this rally up effectively closed the new week opening gap. And now the market closed above. If I toggle on settlement was on, toggling off, you see we actually closed the new week opening gap even on settlement. So we're bearish. Settlement being on and off, you can see that price is very close to last Friday's opening price. So the new week opening gap is closed and we've started rejecting bearish already. Now going down to the 4-hour time frame. Here are the levels I want to see resistance on. At this point, they were disrespected. I was looking at this candle's range and taking the consequent encroachment of key arrays. So now that this has been invalidated, I'm looking to see resistance coming in at the inversion of this. So I'm seeing this as an inverted fair value gap, low, high. If price should trade below this array right here, let's open it up. So you see there's no volume balance up here. The opening price on this candle, or rather the closing price on this candle, is 657 and 3/4. The opening price here 24,657 3/4 is the same price. So there's no volume balance up or down. So that makes this a buy and buy efficiency from this high to this low. So price hitting its consequent encroachment will be good. I like to see that. That will be bearish. And we've seen the consequent encroachment hit. I want to see it disrespected and maybe see lower quadrant get hit and eventually see this BCE inverted. So I'll just pull up gradients on it and I'll be looking at that on the minutes time frame. So I'll put it under a premium. Actually, it's a discount grading to be inverted. So I'm putting up the upper quadrant, the lower quadrant, the high, the low, and the consequent encroachment of this H4BC. And I'm noting high time frame resistance on this. So if we trade above, we're going to be trading to an inversion fair value gap 4-hour time frame. So that fits well for high time frame resistance. And notice that this move up On the E-mini S&P chart, the high right here comes in between 5,098 three quarters. This high is at 25,100. So we trade above it here, but on the E-mini S&P, you see we did not trade above it. So this SMC divergence at that high. Let's look at the Dow. Yeah, the Dow trades above it as well. The Dow does not trade above it as well. So only the Nasdaq takes these relatively equal highs, and these are the highs I mentioned as a draw on liquidity if I'm wrong. So at this point in time, we're seeing a rejection lower after an SMC divergence. And now I'm going to drop down into an early time frame. So here's the 1 hour time frame. And we see that the void portion of the new opening gap was filled. So I was noting void portion, it could become a draw on liquidity if NQ chooses to manipulate higher. Look at the 1 hour suspension block. So these are notations I was making before the session during the weekly outlook. Again, look at the weekly outlook. You said I was looking for these levels, this and this, as counter item from ideas. So the void portion here got traded to. These highs got traded to. And after the session, that's 2 p.m., 3 p.m., 4 p.m., market closes around here, and we see this 8 p.m. candle starting and trading down towards the BC, effectively inverting that array. And we see an institutional order flow entry drill on the 1 hour time frame here, showing that the order flow is bearish and price is in a hurry to get down. So this is an institutional order flow entry drill on the 1 hour time frame. So price has been bearish all through. These are discount weeks we could look at. I'll just draw this one out. So this is a discount week, should serve as resistance at this point in time. So the market review, I'll go down to the 1 minute time frame, but let's just look at the narrative on the 15-minute time frame. This is the last thing I'm showing you on the alley. This 1 hour suspension block did not hold price down. It did at the beginning, but when we saw it disrespect consequent encroachment, this kind of disrespect consequent encroachment again, it should have rejected strongly lower. But when we are heavily bearish, we don't want to see candles trading into consequent encroachment as much, even though the bodies really respected it. But sometimes the price action is so it rallies, prices higher, and now we're trading back down. We want to see this inverted eventually on the way down, but I'll take that off for now. Let's hop onto the 15-minute time frame. On the 15-minute chart, retrospectively, this is the narrative I was taking into the session. So a liquidity rate is confirmed. I saw this as a Judas swing. This rally higher to take London launch high. I saw that as a Judas swing, and I saw it trading into resistance. So I was looking for rejection lower, which happened, and I shorted following that move lower, shorting around the 930 opening price, and I got my ass handed out to me with this massive rally higher. So it was not likely. I got whooped, I got cooked, bruh. And let's just look at it in lower time frame though. But I'm noting Asian highs on this time frame. Asian highs were right here. If you look at the recording, I was saying I do not want to see Asian highs traded to for bearishness. A counter attack from idea bodes well for that, but if you go down to counter, if you go down to lower time frame, there's no entry. At best, it's a continuation, but there was no entry. And the question was coming in late. Majorities were new void portion of the new opening gap, and if you see them, you can see a dip into this BC. But then look at the risk, look at the reward. disproportionate. So I mentioned Asian high, we traded to that, and I was not really targeting that clean high up there. For counter trade my day, I was targeting the void portion of New York opening gap and Asian highs. All that got smashed. So dropping down, now you could see on 15-minute time frame, my narrative was bearish, and I was noting that I'm waiting for exchange of delivery bearish. That actually happened. You can even see a 15-minute structure shift, and I'll say I'm permitting it to go above the mean opening price of premium prices. We did that, but we did it in such stunning fashion. After the liquidity rate, we did it in a gigantic candle up. Major buy side liquidity was here from Asia. That got traded to as well. So counter tariff ideas really popped up on the chart. I'm scrolling down to 1 minute time frame and I'm looking at the session just to show you 7 o'clock to 5 a.m. That's the Asian session and its range. You could see that the Asian session from 7 right here to 5 a.m. right here, we traded lower, so sell sides were engaged, sell side was made jagged. Buy side had some clean liquidity like this equal highs here, this relative equal highs here as well. So those are my major pulls of buy side, and now we have the Asian high. So during the pre-market session at 7 a.m., price was expected to trade to those levels. London launch already traded to this and posted London launch high. Now price trades up to it after 7 o'clock open. So price trades sweeps London launch high after a Judah swing lower on the session, on the pre-market session. That sweeps is relatively equal lows. We see, let me zoom into that. So we see a market structure shift right here. Shift structure, all this is retrospectively, yes, in hindsight. This market structure shift. There's an inversion fair value gap right there. You see that get disrespected. So this will be a pre-market session move. Inversion fair value gap right there. And price actually retreats down into what looks to me as an optimal trade entry. Right there. So from that low to that high, it's a perfect sweet spot. That's optimal trade entry. And that was the setup. And actually taking that setup produces London launch high. That was a very good setup during the, if you look at the macro, that stuff keeps blocking. So 750 to 810, that's the macro right there. And what to trade, price confirms its bullishness by keeping support. After this entry, it rallies. There's fair value gap here as well, inverted fair value gap here as well. This is a suspension block actually. Price gives good entries off these arrays, this low stays intact. So there was a very good pre-market session trade between 7 to 8 during the 750 to 810 macro. This is actually a bread and butter setup targeting the buy side. Major buy side liquidity here. There were two of them. Where's the previous one? Let me scrub that down a bit. And here, right here. So those were draws on liquidity for this setup, and it's the ICT bread and butter setup for 2026. Now we see this rally up. We find support here, rallies. This is the first presented for value gap after 7 a.m. Drawing it out, you see it being used here with support. when price finally goes below, you see it being used for resistance. But that does not have any influence in determining this trade. But when it does get above it, with the closing basis, I think on the lower time frame it stays above it, and we rally up to launch London launch highs after 7 a.m. So London launch highs is a good draw after 7 a.m. as well. That's counter time frame because the liquidity was on the buy side. Now going into the pre-market session, that was a move. 8:30 comes in here. 8:30 open, post a move lower. It sweeps this low. So sell stops were engaged. So the 8:30 opening price sweeps sell stops basically. There's volatility that comes in at that level, or at that time rather, and it takes a pool of relatively equal lows. This I did not see real time. So the Judah swing on the sell side was in. There's a Judah swing, price attack sell stops, paired sell stop orders with small money buys. And then we saw a rally after sell stops were taken. So this actually happens in, let me bring this down. Now you could see this Q1, Q2, Q3. So Q1 we saw this accumulation, Q2 manipulates lower, and in Q3 we're seeing this bullish expansion. The opening price at Q2 is here, which is midnight opening price. So all this buying business is happening below midnight opening price, and that's brilliant. I'm going to show you what happened during the 9:30 to 11 a.m. time period. That's the New York AM session. So during New York AM, basically we see sell stops were taken. Pre-market high and pre-market lows stayed intact. Astonishing, but they stayed intact. The New York ATM model was not in the charts because pre-market session low were not taken. But 8:30, this is significant insight. 8:30 sweeps a pool of sell stops, and that's something I'll be taking forward with me when 8:30. There's a macro that runs at that period that attacks liquidity. That's why the 2022 mentorship. I see 2022 model was based off 8:30 opening price. If 8:30 AM runs a Judah swing on a 30 sweep, we look for market structure shifts, fair value gap to the drawn liquidity. We actually see something like that happening here. 8:30 sweeps a pool of liquidity. That's the Judah swing. It rallies higher. Model 2022 is actually on the charts here because this right here, I'll just do this and then look at New York AM open. But this right here is model 2022. The sell side is clean. This is a prayer border setup actually on the sell side too, because sell side is clean. Buy stops are engaged at London launch high. This move higher was tradable using the ICT 2026 bread and butter model. At the same time, this move lower is tradable because this is total soup. Outlining it right here, you can see clearly. So that's the total soup. We see a market structure shift lower. As this is soup happening at a key times liquidity pool, so that makes it high probability. We see a market structure shift right here, as well as change in state of delivery. Then price trades back into that change in state of delivery. Change in state of delivery is right here. These two up close candles, that sweep liquidity actually above this high and at this high, London launch high. Those candles have the opening price here. There are two consecutive up candles. So when price closes below this and bumps it again, that's change of delivery. Stop loss is above the high. the position will look like this. So the entry will be at the change state of delivery. Maybe after the market usual shifts would be preferable, but either way, you have an entry somewhere in there. Protection could be at the bodies of these candles, or maybe at this high to be conservative. But the bodies here give 23 handles, which is sensible, and a terminus will be at the lows. This cleanly relatively equal lows. Very insightful. This setup happens just ahead of 8:30's open. So 8:30 opening price comes in right there. So right here, this 8:30 is open. And this model 2022, bing, bam. It takes a couple of minutes, but it plays out beautifully. 3.44 easily. That's 4 hour. So why was I interested in this? When there were good setups like this. Come on. I could do better, you know. So 9:30 opening price. 9:30 opening price was a killer. It just rips. I was waiting for 9:30 opening bell, but then I shouldn't have. I really shouldn't have. But shoulda, coulda, woulda. So price opens, runs down, sweeps the short-term low, and that's all. Boom. It attacks pre-market high. It attacks the major buy-side liquidity from Asia. It attacks Asian highs right here, and it rebalances. You see this consolidation here: up, down, up, down, up, down. This is redelivering the inefficient portion of the new week opening gap. Even this as well is doing the same thing. Is rolling up and down, ensuring paint is well applied to the wall, which was void of buy side and sell side delivery in a new week opening gap. If I should toggle on the new week opening gap, you see it clearly, but just focus on this for now. And I'm bringing attention now to the left portion. This is regular trading hours. So price opens straight lower. It opens here rather. This is a gap down. I was expecting bearishness due to the fundamentals clouding the news and all that, and the chart was bearish. So bearish order flow, gap down, everything was pointing to the sell side. Sells with higher probability, my bias is bearish. But the thing is, everybody is bearish. Now, when the masses are moving one direction, the best direction to move is the opposite direction. So retail risk is moving bearish because there's a war in Iran. It's bearish for stocks. Everything is bearish. So everybody's moving bearish. There's a massive gap down. What do? They run it against everybody's stops. So it opens here after engaging all this already. So sell stops at New York PM lows, New York AM lows, New York PM lows, all are engaged. This is induced, engaged as well. And it rips against them, it runs against all of these orders. Sell stops were here, is pairing those sell stops and moving in the opposite direction. It gives a complete gap closure, takes New York PM highs, launch highs, rallies as high as New York PM high, and then it gives up the ghost, retraces and closes. That's basically it. You see launch from an SMC divergence, rallies. I'm bringing attention to the reversal macro from 1150 to 1010. 1150 right here to 1010. Sorry, 1050 to 1110. Excuse me. So that macro did not do much. It just basically kept pulling higher. And right here we see an SMT divergence. Looking at the ES, that's not aligned. That is not aligned. Let me reframe that. So ES sweeps the intermediate term highs or lows rather during launch. So these lows formed at the start of launch, they're taken out here. and it rallies. But we're not yet talking about launch, we're talking about this for now. So this is SMC divergence. Runs this low and it rallies towards the new week opening gap. On NQ, you see we did not run the low. Underlying strength will rally, and that's the rally that takes Asian highs. Just scrolling down to show you. Oh, come on. Oh, that's rally that takes the immediate rebalance. That rally hits immediate rebalance. That was not Asian high, that was immediate rebalance. Asian has already been taken down here. So I might be tripping, but that's immediate rebalance. We consolidate at it, keep consolidating at it, trade down below it, launch launch ends, the silver bullet trades up, almost hitting this high. So it trades up to those relative equal highs, just nicks it. Very nice inducement, and it retraces. From there, we've had sell stops taken. 315 on the dot, you see those sell stops taken. And the 315 to 345 macro basically consolidates, pulls this high, and we close. So that was it for Monday. Not the best of conditions, but mind you, when we expect rough conditions like this, there are always clean moves during the pre-market session. You could see a lot of them from 7 a.m. They're very clean moves. It's unfortunate that I'm not disposed to be at the charts before 8:30, but again, they're very clean moves. We looked at the 2023 model, we looked at ICT's bread and butter model 2026. So there were high probability trades counter higher time frame, but that was before the session. All this I think is a manipulation, and we're going to see move bearish. So that's been it for this review. If you found this insightful, if you like this method of doing it where I'll walk you through it instead of just drawing out the levels beforehand and showing you exactly what happened, let me know in the comments. If you prefer everything is on the chart already and I just explain, let me know as well. If you prefer me doing it as we go, like we did here, or the video is a bit longer, let me know in the comment section. And I want to produce as much value as possible, authentic, reliable, and consistent. I'll see you in the next video.